Current Affairs.
This is Akashvani. In the weekly program Current Affairs, now we bring you a discussion on Economic Survey 2025-26, projecting India's robust growth in next fiscal. The participants are A.K. Bhattacharya, economic analyst, and Subimal Bhattacharjee, AI expert. Moderator is Sonu Sood.
Union Minister for Finance and Corporate Affairs, Srimati Nirmala Sitharaman, tabled the Economic Survey 2025-26 in Parliament yesterday. Key takeaways of the Economic Survey we will be discussing today. We have with us two experts in the studio, Mr. A.K. Bhattacharya and Subimal Bhattacharjee. AKB and Subimal, warm welcome to both of you from Akashvani.
Thank you.
Thank you very much.
So let's start with you, AKB. The Economic Survey is a much awaited document which tells us about the performance of the Indian economy. We would like to know from you, in your words, what you feel are the major objectives of bringing out the Economic Survey in the public domain.
Well, this has been a very, very old practice, as old as the budget making tradition in India. Even before independence, there used to be kind of an economic policy review statement before the budget would be presented. So this is a very, very old tradition, steeped with a lot of meaning, because when the economic survey is presented, it is an account, the government's account of how the economy fared in the just concluding financial year. And this is immediately followed presentation of the government's annual financial statement, or what we call the budget. So when you are looking at the economic survey, you get to know that what are the areas where the government is looking at very closely, how the government sees the economy has performed and fared, and what could be the areas of concern, or what could be the areas of policy correction going forward. So therefore, this is a document that is very closely tracked, not just by people in the media, but also in the industry, in the economist fraternity, analysts, and even the markets. Even the markets respond to some of the statements that the economic survey puts out. That is broadly the significance of an economic survey. And as a matter of fact, you do often try to find out what could be the budget signals in any economic survey, whether it could be about some decision to be taken and announced in the budget. So, which is why economic survey has assumed such an important feature in a calendar of the government, even after the tradition of coming out with quarterly numbers, the monthly, the production numbers,
right,
or the inflation numbers. Economic survey has not lost its importance.
So it gives the overall picture of how the economy fared, and also gives a lot of pointers as to where we can focus going forward.
And economy not in a very narrow sense, economy in a larger sense. For example, there are always very important chapters on the social sector of the economy. There are chapters on the environment sector, and there are, like in this survey, there is a chapter on artificial intelligence. There is a chapter on how the urban living conditions need to be handled. There is a chapter on how the government should respond to the challenges that emerge in front of us.
Absolutely. So you talked about the challenges. As we all know that we are facing a very, very challenging global environment right now. There are geopolitical, geo-economic challenges, which the economic survey says will continue in 2026. In that backdrop, what kind of a message of stability does the economic survey, which has been tabled yesterday, give if we look, focusedly at the GDP growth figures which have been given for the current financial year, which will end on 31st March, and the projection which has been given 6.8 to 7.2% for the next financial year? How do you see these figures?
Given the fact that not just India, but the world is going through some sort of churn, whether it is a question of the US president using tariff as a weapon, or whether the oil supplies are suffering sanctions globally in different ways. so much so that India had to reduce its oil imports from Russia because of the tariff action that the US took on India.
Yes.
So, in this situation, the message that the survey conveys is one of stability, that in spite of all this turbulence, the Indian economy has by and large emerged relatively unscathed, given the fact that the GDP growth is at 7.4% in the current year, and as you mentioned, in a range of 6.8 to 7.2% next financial year, which is 2026-27. But more importantly, what it points out is that the trajectory of potential growth, which the economic survey undertakes over a period of time, showed that 3 years ago, the potential growth trajectory of the Indian economy was estimated at 6.5%. And today, in spite of this instability or the global uncertainties, risks around us, the potential medium to long-term annual potential growth rate for India is now estimated at 7%, which is a sign of hope, which the markets will appreciate. And going forward, this will be the kind of a base on which economic policies can be framed on.
Shubhimal, to bring you into the discussion, what is your first impression of the economic survey? What kind of optimism does it create for us to be moving towards a future-ready kind of an environment, which is technically in line with the advancements taking place around the world, especially if we talk about artificial intelligence?
I think as Mr. A.K. Bhattacharya has rightly pointed out, I think the economic survey gives a very nice canvas to understand everything fared in the previous year and how, what is an expectation to look forward financial year for which the budget would be presented in the next 2 days. It's very, very important to understand these parameters by various sections of the stakeholders when you look at the overall macroeconomic picture of the country. And particularly, in these times when, as you mentioned about the geopolitics, geoeconomics, and all the disruption, turmoils, and the serious uncertainty that's around, I think it's very, very important to see that there is a common picture and understanding as we try to handle the situation on the ground and as well as make our policies and the budget for the next financial and the future. And in this context, I think whatever effort is being made, to expand the contours of the overall ecosystem, look into new areas, look into how do you optimize your performance and capabilities within the constraints that are around. And how do you look forward to all the sunshine areas of the economy also? And that is where I think the economic survey puts across a very nice document. I think the special chapter on artificial intelligence, or even if you look at the service sector as such, as well as the manufacturing sector in which the new tech economies, footprints and pedestals are getting stronger and expansive on many fronts. If you look at the focus on the semiconductor mission, if you look at the service-led growth with the IT and IT-enabled services, if you look at the innovation ecosystem, where actually we have climbed up dramatically, and of course the infrastructure expansion as a growth multiplier, I think the economic survey lays everything quite well. So if you look at the pace at which artificial intelligence is being put across and many various sectors of the economy. Now, how do you harmonize that? How do you look at the competitive landscape? How do you utilize the strength that you have in the country?
Yeah,
I think that again is very, very important. The focus on indigenous AI development for quality employment, I think it's important because the survey has emphasized also that India must develop its own AI solutions rather than depending on foreign companies. And AI remains still at an early stage globally. And by building those indigenous AI capabilities, India can create more meaningful and dignified employment instead of remaining just a source of cheap labor.
absolutely.
So the survey advocates for a decentralized, application-driven AI strategy over capital-intensive frontier models with AI training integrated at schools and university level through public-private partnerships. So there's a whole approach, I would say, and I think it delves into many various areas of the economy, and ultimately it adds to the overall GDP or the vibrancy of the economy.
In fact, Chief Economic Advisor Dr. V. Ananta Nageshwaran spoke about the issues related to AI covered in this survey and how government is looking at developing local AI models. Let's listen into what he said.
The last economic survey had a special chapter on AI, and this survey continues that. And the issues are with respect to the following that this chapter covers: the data center resource consumption, whether it is power or water or land, the kind of financial requirements for the large language models in the current ecosystem in the Western world, and data localization for domestic value creation, of course, the macro question of mitigating the labor market impact, navigating geopolitical constraints to hardware access, including chips, and importantly, from a geopolitical security and dependability perspective, can we continue to depend on foreign models for use in public administration and critical sectors? Of course, the government is already making its position very clear. We are going to be looking at developing local models, which are underway actually, and some of it may be rolled out in the course of the AI summit next month. But these are the various trade-offs that this chapter 14 tackles.
If we look at the main pillars of our economy, agriculture, manufacturing and services, all three have seen an upward trend as per the economic survey. The services sector grew 9.3% and manufacturing grew 7.72% in quarter one and 9.3% in quarter two of financial year 2025-26, reflecting structural recovery. And the agriculture sector has for the last 5 years been over 4.4%. How do you see this all-round growth of the economy?
Well, I think you rightly pointed out how the different sectors of the economy have done well, and you mentioned in particular the services sector and the manufacturing sector. And the economic survey highlights this area of how both the manufacturing sector and the services sector, they have done well, but brings out a very interesting proposition by comparing the relative importances of the two sectors. What it says is that in the services sector, doing well does not necessarily lead to systemic improvement in the infrastructure or in the policy space. Because a services company can grow on its own standalone basis, whereas the manufacturing sector, if it is growing, then it also brings about systemic improvement in governance, in infrastructure, in job availability. So therefore, the survey underlines that while we are doing well in services, it is time that we focused more and more on the manufacturing sector. Because if you do better on manufacturing, then we also necessarily and naturally bring about improvements in the infrastructure, bring about improvements in the job market, and also we create a lot of demand. Therefore, this survey actually presents very important policy prescription for the manufacturing sector, how the downstream industries need to be supported, and while the upstream industries need to face more competition, and so that both the upstream and the downstream industries become more export competitive. So I think this survey, relying on this growth trajectory, both services and manufacturing, presents a new policy prescription that if the government were to adopt, probably we will see a bigger push to manufacturing, we will see a bigger push to our export competitiveness at a time when the exports market have become a little uncertain. Yes. We will see a bigger push on our job creation, and probably the demand sustainability for growth will also see an improvement.
Chief Economic Advisor Dr. V. Ananta Nageshwaran spoke about the three engines of the economy, including agriculture as the key one, and about the growth in agriculture sector, which really affects the majority of our population.
The other priority is agriculture. In fact, in the global environment that we are getting into, all three engines of the economy, agriculture, manufacturing, services, have to fire together. And they are doing that in allied areas. Livestock and fishing and agriculture have grown at more than 6 and 7% in the last 5 years. Traditional crops can match them. If they do so, agricultural GVA will be much faster than what we are experiencing, around 3 to 4% today. And the chapter goes into what are the various steps we can take, starting from rebalancing the fertilizer consumption, looking at rice and wheat procurement to encourage crop diversification for the sake of nutrition, for the sake of soil fertility, for the sake of water tables, etc. We can take a look at how we can, through policies, encourage crop diversification.
So, Shubhimal, can you tell us how technology has been utilized so far in facilitating these three major pillars of our economy, and what are the possibilities going forward if we look at the overall picture?
Definitely. I think the usage of technology has definitely optimized in all the three sectors as you have just mentioned. Particularly in agriculture also, the equipments, the usage of information, based on large language models, again, AI based, the usage of local specific characteristics, and then reducing the capabilities of widespread information that is available to very specific supportive modules, I think have shown results. The whole idea is to see that how do you optimize your agricultural productivity, not only to be able to be feeding the country, but also make them competitive from an export point of view. So there are various success stories, I have seen in the Northeast also now, which was a kind of a laid back place, but the focus on agriculture is giving productivity to many smaller states in the Northeast that now they are started exporting. Tripura exports a lot of pineapples. There's a lot of ginger export happening from the hills of Assam. So like that, there are a lot of activities that has got a new avenue and quickly the export market.
Yes.
I really liked Bhattacharya mentioning about the focus on manufacturing that is there now. If you look at in the manufacturing sector, the PLI schemes, performance linked, production linked incentive scheme across the 14 sectors that attracted over rupees 2 lakh crore in investment, generated the 18.7 lakh crore in output and created 20.6 lakhs jobs. So this has been a great success story. Even if you take the mobile manufacturing segment, which nearly saw a 30-fold increase in production value, rising from about 18,000 crores, if I remember, in financial year 15 to now 5.4 lakh. So from a net importer, India has now become the second largest mobile phone manufacturer with over 300 manufacturing units. So this is a great story in a very short span of time. And it happened with the right policy support as well as people going and investing. I saw a statement in the economic survey about many Indian industries being a little bit investment shy or not putting much into the R&D and all. I think we have to create those avenues and spaces where we find newer investors and people with money going and investing in newer areas. The defense, manufacturing, the whole MSME that gets into the overall defense equipment manufacturing again has seen a significant support. And of course, the service-led growth with the IT industry, etc. and all. Now today, services account for nearly 62% of our urban employment and of course remains the largest source of formal job creation. So from service exports, growth accelerated from about 7-8% pre-pandemic to around 14% in the recent years. Mm-hmm. So, bringing in about, I think, US dollar $283 billion in financial year 25. So I think the GCC models, the Global Capability Centers, recorded a 7% CAGR between financial year 20 to 25. That again has been a great success story when a lot of music coming from the US and even some European places, which actually have helped grow the Indian IT industry. But now many of the large corporations are actually putting up capability centers. So we are able to decide the talent in the country, get them employed. So absolutely. I think, we are on a right path in all these three sectors that you mentioned. It's that we need to see the momentum build up further, and in the current turmoil and all, how we are able to enhance and perform and keep the economy going stronger.
Absolutely. Coming to you, AKB, we talked about the GDP growth. Inflation is contained and anchored at 1.7%. If you look at some other very important metrics, fiscal consolidation, how do you see the figures which have been put out, from more than 9% in the pandemic year 2021? We have come down to 4.8% in the financial year 2025, and the target for the current year is 4.4%. Do you think that we are on the right glide path? How do you see this situation?
Well, I think the glide path targets have been met in the sense that when we reached fiscal deficit level of 9.2% in 2020-21, the glide path was that we should come below 4.5% by 2025-26. And it appears that the current year, which is 2025-26, will be ending with a fiscal deficit of around 4.4%. But more important, that fiscal consolidation reflected in the broad fiscal deficit number is the manner in which the quality of government expenditure has improved, and that is evident from the manner in which the revenue deficit has come down even at a sharper pace. Now, revenue deficit, which used to be around 6 or 7% in the pandemic year, has now come down to just about 1.5% of GDP. So, which means that we are spending more on the capex and we are keeping a tight leash on our revenue expenditure, which often is considered a little wasteful and consumption oriented. So therefore, we have managed our finances very well. But this survey does not shy away from pointing out that probably the states need to do something similar what the center did, because there has been some slack on the part of some states, particularly where their fiscal consolidation targets have not been met, their debt levels have risen. Okay. So therefore, there is need to transfer and transmit this message of fiscal prudence across the states, because please remember that the investor, and we are a capital scarce country, so when you want to have more capital from outside or from wherever, they will not look at just the central government's fiscal numbers, they will look at the entire government system's numbers, and when the entire government system numbers is read, you realize that the states which combined together are more than the center have slightly adverse impact on the overall numbers. So therefore,
the investment attractiveness goes
so
down.
the economic survey has rightly raised this issue on why the states too need to follow the path of fiscal prudence.
Absolutely. In fact, the government debt you were talking about, if you talk about the central government debt GDP ratio, that has come down by 7.1% since 2020, despite the public investment, the capex. Now, if you talk about the capital expenditure by the government, we always talk about the multiplier effect on the economy, the increase in demand, which is reflected in the private final consumption expenditure, which has also gone up 7% in financial year 2026, reaching 61.5% of GDP, which is highest since 2012. So you think, what would you say, what policies of the government have really contributed to this stability coming back despite such a difficult period that we went through during the pandemic and recently, and ongoing trade and tariff?
You have raised a very important issue. I think as the country was facing global economic challenges, global uncertainties, the domestic economic reforms agenda was expedited. In a sense that we saw, let's say the last budget talked about an income tax relief which was a substantial demand stimulus. Then came the GST rationalization. Then came the labor codes which were notified. Then came the MSME sectors, the investment and the turnover limit being relaxed. The nuclear reactor sector was opened up to private sector. So you saw a series of reforms that were unveiled, and that helped keep the economic engine revving. So I think in spite of those global challenges, global capital shortages, which has actually affected some of our investment flows here, and even the value of the rupee has been adversely impacted. So I think we have managed those challenges because of those reform drive that we saw in the last 1 year.
come back to currency. Before that, I would like your views on the fact that gross fixed capital formation grew 7.8% in financial year 2025-26. Is this a clear indication that investment activity has strengthened?
Investment activity has strengthened, but even now it is largely driven by the government sector. The private sector is coming in. If they are not coming in, there are reasons also. The capacity utilization level is still not that very high. They probably feel more encouraged to keep their money in their safe bank deposits rather than invest their capital into new projects. So therefore, right now it is a largely government-driven gross fixed capital formation, but I think private sector should be encouraged to come in, and if there is one message in this economic survey which is loud and clear, is that while you give the incentives to the industry, but also make industry respond to those challenges and come out with more investment, which creates more demand, which creates more jobs and sustains growth.
So we were talking about the reforms express, and definitely there are constantly reforms being brought on which bring the kind of results. We are moving in that direction where the industry is being encouraged, startups are being encouraged, MSMEs are being encouraged. Through these free trade agreements, opportunities for more exports is being created, more competitiveness is being provided to the Indian manufacturers. In all this context, what would your expectation be from the budget which is going to be presented 2 days from now?
Well, I would imagine that there should be some more factor market reforms, in the sense that agriculture is an area where we have seen some growth, but it requires more reforms. And I think the economic survey does hint at those. Economic survey does underline the need for more disinvestment. I would imagine that the budget will provide some indication of a new path to be followed of how the asset sales can take place. And I think the manner in which the economic survey underlined the need for making the corporate bond market more attractive in terms of taxation, from the point that possibly the budget will address that concern as well.
Yeah, and Chief Economic Advisor Dr. V. Anant Nageshwaran also mentioned about the decline in unemployment rate when we are talking about, the fact that it's so important to engage more and more people into from the private sector. And he also talked about the inclusive growth parameters.
Employment conditions have improved from the year when PLFS, the Periodic Labour Force Survey, was launched. 6% was the unemployment rate then, down to 3.2% in 23-24. Female labour force participation rate is up nearly 18 percentage points, and the unemployment rate in the first 9 months of the year has been steadily declining from 5.4 down to 4.9% in the last quarter. In terms of other inclusive growth parameters, in rural development, 81% of rural households now have access to tap water. 2.9 crore houses have been constructed and 2.76 crore property cards issued under Swamitwa. When it comes to healthcare, 14.3 crores beneficiaries registered on the UWIN portal, 42.8 crore Ayushman Bharat cards issued, 1.8 plus lakh Ayushman Arogya Mandirs operational. And we include online gaming in this because it matters for mental health. So that is why we included the Online Gaming Act, Regulation Act of 2025 in this category.
So it's a very comprehensive approach of the government. Shubhimal, if you could just tell us what would be your topmost expectation from the budget given the economic survey which has come out?
This job creation and the expansion of the whole canvas in which a job can be provided, newer areas, tech areas, the right amount of skilling, I think that's what needs momentum, because that helps to be able to take care of the gaps that are there. I think various areas within the economy we have already identified. The government is giving the policy support, but I think a little bit more cushion to all these investments for a wider period of time, and to make them more competitive export-wise should be a focus. Most important it is to see that the young generation are gainfully employed in a changing world.
Mr. A.K. Bhattacharya, Shubhimal Bhattacharya, I would really like to thank you for giving us an insight into the various aspects that have been thrown open by the economic survey regarding our economy and our economy's prospects going forward.
Thank you.
Thank you very much.
You were listening to a discussion on Economic Survey 2025-26 projecting India's robust growth in next fiscal. The participants were A.K. Bhattacharya, economic analyst, and Subimal Bhattacharya, AI expert. Moderator was Sonu Sood. This program was produced and presented by the News Services Division of Akashvani. You can listen to it on our mobile app, News on AIR. This program is also available on our YouTube channel, News on AIR Official. You may share your feedback about this program through email at airnsttalks@gmail.com or WhatsApp on 9289094044.
Current affairs.